All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into the markets here this week. So last Monday, we talked about this rising wedge pattern here. And so we probably go up and get to this upper band. We did that. We actually got outside of it on Friday. So markets right now in pretty much kind of a state of euphoria here. So we talked about short squeeze coming. And we've gotten a pretty nice one here. And I'll admit this rally has gone a little bit farther and a little bit longer than I would have expected here. But that is the state we are in here. Markets pushing up. Off the FOMC meeting, markets really took Powell's comments as dovish. His tone was a little bit more dovish. He did kind of reiterate that no rate cuts would be in 2023. He did say a lot of rhetoric like jobs not done, that type of nature here. But the bottom line is the market reacted positively to it. My guess is right now Jerome Powell is finally starting to realize that the rate cuts they've been overdone. And that's why he switched his stance to bullish. Market likes that here in the near term, obviously, and you're seeing a massive short squeeze. However, there's a reason that he's turning himself dovish, right? So we know the yield curve is inverted, heavily inverted here, and we might be looking at a nasty recession. But right now, in the near term, that's all the market cares about is that it's looking, or the Fed looks like they're getting closer to pausing, even though Powell really didn't indicate that. But the market, the market's the one that the market kind of wags the tail, and they will tell the Fed what to do. But either way, outside move here, and now we did have kind of I'm not going to say it's a top yet, but this is a pretty good reversal candle. Anytime you gap up like that after a power move, and then you gap down the next day and reverse it. Usually you put in, I would say at least a local top is in place here. So maybe some more backing and filling. I wouldn't rule out this one more thrust up in this market. And I know it seems a little crazy here, but, and if we even take a look at kind of like the fear greed index, a lot of people have been throwing this one out there on Twitter. We're now into the extreme greed territory, but these things can still go on a little bit longer, believe it or not. It does. Maybe we've topped already. That's, there's nothing to say that we haven't. But this is just a good barometer here for the state we are in. So take a look at, and just for instance here, like the Russell 2000 risk on small caps. This is parabolic here. Money is flowing into risk assets here. Take a look at stocks like Carvana here, up from $4.50 to $20 in really just year to date. This is euphoria. It's almost like 2021 all over again. And my belief is that they're really sucking in the retail investor here, and they're trying to capitulate the bears before kind of the next shoe drops in this bear market here. But I mean, names like Carvana here. Look at Meta's reaction to earnings. I mean, a $500 billion company or a $300 billion company. I'm not sure what their market cap is these days, but either way, a mega cap up 20% on earnings. And Google, same kind of deal here, although that did fade the highs pretty nicely on Friday. Apple, basically a $2 trillion company, was up 4% at one point on Friday. So we're seeing a lot of short squeezing, gamma squeezing, things of that nature. And when these things happen, they do tend to, sometimes they can go a little bit higher than you think. But again, like we're seeing these kind of risk on names just get so, like Carvana, for instance, I use this one as an example again. This company is going to be bankrupt. And, it's up 400% year to date. So just in the last month. This is not stuff you see at the beginning of a bull market. It's stuff you see at the end. It's short squeezing. It's that type of thing here. But either way, we still have to respect the market here. And until we get a definitive sell signal, they can still take this up here. So please be advised of that. But we are getting into essentially, what I would say the extreme greed, extreme euphoria, kind of FOMO type territory. And again, it's amazing. It's and this is how it's a bear market rally, amongst other things that I talk about all the time. But we're at, so if you were to call this the low, right? It is it's the low, most recent lowest low. So we'll just call this the low. We've gone from extreme fear here to 2021 level of euphoria, in a couple of months. That's how you know it's a bear market rally. So when you get to extreme euphoria in a bull market, it's, at the end of the bull market. And unless you're considering this, a couple of months here, a whole macro bull market, then you'd have to say this is just a bear market rally. And again, we talked about this trend line break. I want to show you something here historically as well. So everybody's looking at the trend line break. Oh, that's it. It's all over with. We broke the trend line. The trend line is not the be-all, end-all, guys. There's trend lines here all over the place that get broken all the time. If you guys follow me on my channel, and I mean, there's 2 trend lines right there, and we still went lower, leg lower here, pop up, leg lower there. If we go back to, I'm not sure if I showed you guys on this weekend charts. I know I've brought it up on my channel multiple times, but if we go back to 2000, which I think this bear market's very similar to the tech bubble, but a couple of long-term trend lines here, and this is what they do. They suck everybody in. Oh, that's it. It's all over with. All-time highs coming. That's it. It's over. All-time highs coming. And, you get those reversals. So just, don't just take that trend line and say, okay, well, that's the be-all, end-all. There's other things. There's other factors here. But in any case, nice squeeze for the market. Bulls in control until proven otherwise. I would say that yesterday would have been a better. I would feel more comfortable calling kind of a top here if we had heavier volume. And I usually never like it when the market typically doesn't top on a Friday. It's usually going to be a Tuesday, Wednesday, or Thursday. So the fact that we didn't reverse on Thursday really means that we, in my opinion, I still think we could hold up a little bit longer here. But either way, if you ask me, this is what markets do. They're just sucking everybody in, and eventually we're going to come to reality. But for right now, extreme euphoria here, extreme FOMO, but do not buy into that. Anyways, levels here. Let's go on to levels here. So I haven't even talked technicals as much yet, but big level here on the spiders, gap fill up here, lots of resistance up here. There's a lot of bags being held from that August pivot. So if we were to get up there, that would be kind of like your extreme upside. If you ask me, on the downside, if it breaks below, we're kind of looking at the hourly here. If it breaks below this lower trend line, we're going to go to test 400 pretty quickly, and then we possibly can get back down to these areas here, 395, somewhere in that area. If that happens, I think the top is in place, though. So just be aware of that. But those are the levels that we're looking at on the spiders. Triple Qs here, again, power move here on Friday, and closed below the low power move on Thursday. And Friday, we closed below the low here. We still held the gains for the most part, but a pretty good reversal there. On Friday, we did go up into these pivots here, red bar. So again, Q's very overbought and extended. You might even get back up to this trend line here. I mean, that's a little bit of a stretch here. You'd have to have like a major blow off move, but we're already parabolic here on the Q's. But a lot of resistance up in this zone. Again, on the downside, you'll have some support at the gap. And then this is kind of this is where you broke out from. So right around 293, 294. And then the 220 moving average kind of in that zone. So that would be your, those would be your targets there on the downside here. In the near term, the Russell 2000, again, parabolic. It's had a nice run. I don't know how much more upside it has, though. There's a lot of resistance at this pivot here, especially given how overbought and extended we already are with the red bar right above that. I like that there as a sell setup often if we can get that. But either way, Russell, huge move here. On the IWM, and we'll respect it. The diamond here via the Dow is still just kind of wedging in this, just kind of stuck in this wedge. So Dow is lagging. Again, that's not necessarily bearish. You want to see risk on. So that is kind of a little point for the bulls there. And the Dow is not really a risk on asset. So the bulls don't need the Dow to rally. So just be aware of that. The upside on this is still 345, maybe a pierce of 345 if we are to push up. If you break this lower trend line, then the Dow has a lot of downside. So we'll just be on guard for that. All right, over here, let's get over to the semis, SMH here. Just like everything else, overbought, pushed through my upside objectives here. So I would be careful with the semis. They are overbought, they are extended, but again, they're holding up well, and we'll respect that for now. We closed the week above this trend line, so maybe this has a little bit more upside in it. I would not be a buyer up here, but hey, lots of strength there in the semis, and that does kind of indicate the market wants to hold up a little bit longer. If we start to see the semis fail, then that could be an indicator here that tech specifically is going to come under pressure. You guys know I love these semis. And by the way, let's look at cloud here. So the CEO of ServiceNow But first of all, this is a nice little gap up in reversal. So Friday, we closed below Wednesday's closing pivot. So we lost all those gains from Thursday. Going up into resistance here, red bar there, breakdown area, a lot of resistance on IGV. But the CEO of ServiceNow sold over, and I believe this came out on Friday afternoon, he sold over 90% of his shares, which is very high. If you're not familiar with that, I mean, insider sells, happen all the time, but 90% is like, I mean, he just liquidated basically his entire position. And he was on CNBC pumping the stock a week or two ago. So little suspicious there. I don't know what to make of it right now, but definitely something to keep on watch there. But yeah, cloud software overall, again, extended, overbought, just like everything else, needs to pull back. Logical pullback target would be 280. If it breaks that, then you'll have a lot more downside, probably to about 265, 268 here. But IGV, again, just like everything else, once the whole market tops out, this will top out. Dow Transports, what a power move here. So I'll admit I did not see this much of a surge coming. And again, you remember, I had no problems really with this pattern here, up move, and you're consolidating bullish. But usually when the transports make lower highs versus the spiders making higher highs, and we've seen this countless times this year play out, where the transports started to break down or show weakness, and the rest of the market rolled over a week or two later. This time that didn't happen. So not, anything can fail, I suppose. But we went right up into this previous failed inside bar, and that has been a high, or that has marked a high pivot for quite a while. Transports overbought, extended, just like everything else here, but we'll continue to give them the upside bias. Again, just like the semis, if these start to sell off while the spiders hold up, it could be kind of an indication that we're about done in this rally. But for now, we'll give them the upside bias here and the benefit of the doubt. All right, I want to talk about interest rates here. Let's look at the 2-year, and this is important. So we got a jobs number Friday, and that got revised way up, like more than double what the estimates were. And you see here the 2-year, and we've been talking about this trend line here, and we closed basically right on that, but good sell-off with volume on the 2-year. Also, where's the 2-year? So this was the FOMC day, right? And here's your low pivot on the FOMC. Where did we close Friday? Did we close above that or below that? Closed below it. So why is the spider still rallying? Because if supposedly inflation is peaked, supposedly we have a soft landing, supposedly Jerome Powell is pivoting, then why is the 2-year selling off? Excuse me, why is the 2-year selling off? Okay, so this is how you look at the bond market, and the bond market is smarter than the stock market. The bond market wags the dog, and the dog is the bond market, and the tail is the stock market, okay? So this is calling BS here on the rally. If this trend line breaks, that means the 2-year yield is going to go higher, which means Jerome Powell is going to have a huge problem on his hand. That's really all the Fed cares about. So either way, it's hanging in there, hanging on by a thread, but it's very suspicious to me that the 2-year is not rallying with the market here. Anyways, over to the 30-year long bond. This one's still holding up okay. You still have a nice inside bar there on the daily. I could, see this continuing to push higher. It's holding up for now. If this starts to sell off, though, then that continues to be a problem for bonds. ZN, the 10-year here, again, that did close below this green bar low here, really actually earlier this week, but also on Friday with good volume. So bonds not looking too good here, I have to say. And that is a problem for stocks. If you're a bull here, you got to be concerned. We're extreme greed on the fear greed index. We've got stocks like Carvana and Meta going parabolic. We've got euphoria out here, and then we have bonds selling off. So something's not right here, and bonds usually aren't the one that's lying. So anyways, so we talked about that. Let's get over to home builders here. XHB again pushed up here, just like everything else, again filling the gap on Friday after coming back in. Lots of resistance up here. There is not a lot of upside, although they did, they got through my upside targets here. I definitely did not see them going that much higher. but they are now overbought, extended, and parabolic here. Amazing moves there off the lows. VNQ, same thing, although this is much, much weaker here. Again, you don't want to see it lose this level. If that happens, you're going to have a failed breakout on your hands, and this will get right back down to this gap fill pretty quickly. But for now, it's holding up, so we'll give it the benefit of the doubt. XLF, here's another little issue here. It's not the end of the world if financials don't rally, but remember a few, what was it, last month or December? We talked about, hey, look at the weakness in the banks. And that kind of led to that little December sell-off that we had towards the end. Financials here are not really rallying with the market. I mean, they're up, yes, but like we never even challenged Wednesday's high. I mean, I guess we challenged it on Friday, but we did not close above it. We never, really broke it. And I'm just thinking of it in this term, like, so we've had an inverted yield curve for 7 months on the 210, and then the 3-month 10-year has been 3 or 4 months now. That's going to start hitting these balance sheets pretty soon, and I don't know. The last time we had FTX blow up, everybody's kind of seems to have forgotten about that. I think if there's another shoe to drop that's not related to CPI or bonds, it could be related to credit. So I don't know. Financials may be talking to us here. For right now, though, they're not really making new highs. You're kind of stuck in this little wedge pattern here. So we'll continue to keep them on the radar. If they start to break down again, that could be a sign that the market is rolling over. So again, continue to watch those transports, financials, and the semiconductors here moving forward. XPD is still holding up really well, though. Basically, challenged that 500 pivot and pulled back. This is also overbought as well. Anyways, over here to energy. So crude did roll over a bit this week. Nice weekly inside bar pattern. I think this wants to have one more leg down, and we've been talking about that for a while. I would not be a buyer at the 200 moving average. Personally, we've done too much consolidation here. I think we can get a little bit lower, maybe even to 60. That should be a pretty good floor, though, if that happens. But crude did roll over a little bit here. Nice little dump. Really Thursday, Friday, and some follow through there. We closed right at this lower trend line. So we'll see what we get here. But yeah, crude under a little bit of pressure here. We'll continue to watch that moving forward. I do have some levels worked out. I just want to see those numbers hit. But for now, it is still having a bear bias there with that weekly pattern. XLE did come in a little bit. I'm wondering maybe some of this is a little bit of rotation here. Maybe some, there's a lot of new money coming to the market too. Now that everybody thinks that, the water's warm, the water's fine. So kind of like maybe some people moving away from kind of the Exxons of the world here and sort of the defensive names, everybody kind of giving up on the Conoco's actually under quite a bit of pressure here actually this week. But basically we're seeing kind of rotation from like safer, energy names and into kind of tech risk on. Again, we looked at Meta, Google, Amazon having these big moves, Apple. So possibly that could be the case there. Either way, nice little pullback there for XLE. You'll have support down in this range if that breaks again. I would love to get it down at this trend line here. But for right now, XLE is holding up. XOP, same thing, although it did come back into this kind of yellow channel. So couldn't sustain that breakout there. And it did close back in that range. So XOP under a little bit of pressure. OIH also holding up really well on Friday. This still has a really good monthly pattern here. So there you go. So kind of like a monthly inside bar. It's holding up well. And yeah, I can't really say anything bad about the chart here, although it is still kind of overbought on the bigger time frames. Anyways, over to Nat Gas. Nat Gas continues to get punished here. This is definitely forced liquidations. So when you have funds that are piling in at the highs and they're in leverage, it looks like they're just getting margin called and margin called here. What will happen though is once those funds liquidate, you'll have a lack of sellers and there will be nothing left but buyers. Also, I mean, the numbers don't add up. We talked about this last week. Lots of producers now below the cost of production, or price now below the cost of production. So there are some imbalances here, and to me, this is absolute no-brainer at this point. Also, historically, seasonally, Nat Gas generally trades down into about the middle of February, and then it trades up into June, July. So I think seasonally, Nat Gas is coming into some favorable tailwinds here, but this is a pure mechanical move. it's really just over leverage and it needs to get out of the system here. But nat gas to me is just it's such a no-brainer here, and the upside is tremendous in this. So anyways, let's get over here. Let's touch on ag really quick. DBC did roll over a little bit, kind of looking like crude here. So some of the interesting, like some of the commodities like ag here did come in and crude came in, but bonds still kind of signaling inflation here. So maybe a little bit of a arbitrage there. But either way, DBC still in backing and filling mode. You guys still know I like the longer term charts on these. MOS really kind of a sideways week. So the potash names were really kind of it didn't get hit as much as the pure ag names, but either way, a little bit of pressure here in ag. Nothing crazy though. I think I told you guys 23 or 22. Yeah, 20. We'll call it 22 here would be a big level there. Although that 100 moving average is upsloping, so we'll see if that has any impact. Maybe that gets tested this week. All right, over to uranium here. CCJ continuing to hold up. It did sell off nicely Thursday, Friday. With everything else kind of. We went up into a lot of, up into this red bar here, but Euro extended anyway, so this needs to pull back. I do like, we talked about this last week, we closed above that red bar. That shows a lot of strength, so this can be bought on dips. Yeah, I don't know, if you get to that 20 moving average in the next 2 days, it'll probably get a bit off of that. The better level would be around 26 here in the near term. So we'll see if that can get down there this week, but uranium continuing to hold up well. URNM under a little bit more pressure here. Maybe, might be a little fake breakout there on URNM, but we'll see if it can put in a higher low. Then it could possibly continue to push up here. But yeah, I did do some backing and filling this week, so we'll continue to watch that moving forward. All right, over to DXY. I've got sell signals on a ton of currencies here. So the euro, that's a really good rising wedge pattern. Nice sell off there Thursday, Friday. That broke down. That's probably going to want to get down to about 106 there in the near term. The Aussie dollar, beautiful 618 retracement, big outside candle the last two trading days, engulfing reversal on the weekly. And the DXY, look at that weekly candle. So we just wiped out the last 2 weeks worth of selling in 1 week. Beautiful reversal. I think the dollar has bottomed here. So we're looking at a rally in the dollar index again. And a lot of people are saying, hey, the dollar's done. It's all over. We're going back to the highs. Really, you just got to look at the bigger time frames. All we did was back test this breakout here. So dollar index getting a nice bounce. That may put some pressure on the markets, although even with the nice surge the last 2 days, markets weren't really acting like they were that panicked. So this might be some kind of a delayed reaction here. But I do like the move in the dollar, and I do think we have a little bottom in place here on the DXY. Gold also reacting. I've been in here every week telling you guys, like, look, gold's overbought. It needs to correct here. If you're long this, trail your stop, and look at what gold did just on Thursday, Friday. So you just wiped out 3 weeks worth of trading in 2 days. So lots of resistance up here. Gold, your near-term levels, you'll have some. Ultimately, I think it wants to go to 1820. That would be kind of your near to medium-term level. There is some support right around here. We'll see where it opens tonight on the futures. So the 50 moving average is upsloping there, but nice sell-off on gold. I've also been kind of cautioning everybody on silver too, and again, it's not a bad consolidation pattern, but this has failed now. And we talked about a possible rolling top. That is in place here. So next stop on silver is at that 22 level. This might get a little bit lower. You have a lot of volume and a lot of velocity behind that. I will be a buyer of silver again. We will swing trade this again. I've done that plenty of times last year. But it's got to come in a little bit more. And you have some velocity behind this move, so that tells me it probably wants to head a little bit lower here and gain some momentum. But it will be a buy here in the future. Platinum, same thing. Nice outside move on Friday. Got down to 980. It should test, I would say at this point, I said 975 all week. I would say maybe even 960 at this point. Just call it 950. We'll go to the 200 there. There should be some decent support, but nice sell off there for platinum. This is in backing and filling mode. I'll look to trade this one again as well, but we need to do a little bit more backing and filling before I get interested. Copper also backing off as well. Nice little rolling top there after that topping candle a week or two ago. And again, I told you guys $3.95, $4. That target has not changed. Lastly, over to Bitcoin quickly. Bitcoin's actually holding up. There's my Bitcoin chart. Bitcoin's actually holding up okay. Above this kind of 20 moving average here. Not the greatest kind of bull flag. I would prefer it to be more like a right angle. So, you know, just more kind of like sideways, but I don't like how you're making higher highs. But I'd still give this the upside bias to 25,000 as long as you hold these pivots here. If these start to break down, you might head right back down to about 2150. And that would kind of really dampen this kind of bullish pattern here in the near term. But for right now, Bitcoin's holding up, so we'll respect it for the time being. All right, anyways, back over to the spiders here. Extreme greed, extreme euphoria. That doesn't mean we're going to crash tomorrow, but just understand the conditions that we are in. You know, speaking of, you know, Bitcoin, look at Coinbase here. You know, $30 to $90. This is not new bull market stuff. In a bull market, you don't go from extreme fear to extreme greed in a few months. Like it usually, first of all, the first couple of months, everybody's still calling for new lows. I can't tell you how many bears flipped bullish this past week on my timeline. So just be aware of the conditions we're in. They're trying to suck in all the longs here. They're trying to get retail back in the market. It feels like 2021 again. So be careful with your trades moving forward. Anyways, guys, going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.